Aven Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aven's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avenresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ross Kay, home ownership consultant, and also from the healthyhomeowner.ca. Welcome back to the show, Ross.
Hey, thanks for having me back, Jim.
Since our last show, 4 huge real estate reports have been released, some with November housing numbers, others with forecasts for the new year. The Canadian Real Estate Association, Terranet National Bank, Remax Royal LePage, and even the BC Real Estate Association all inundated us with these numbers. Overall, how would you rate those reports, and what should we take from them, if anything?
Well, if you go back to listen to our old shows, I've always told people that there are special moments in time with housing math. There's special metrics in math that come along in real estate math. There's interest rate. There's 9.84% interest rate for a mortgage. That's a special number. 6% interest rate. That's a special number. These are all special numbers for a reason. They're for a reason because you can't avoid the math when it comes to real estate. The reason we're so accurate with our forecasts is because this math is unavoidable. And even all of those people that you commented on there, Jim, those groups all sooner or later have to come to the conclusion that the math is going to prove them right or wrong as we go forward. And we're starting to see some debunking of myths, debunking of self-serving interests of these groups starting to appear this month. So you gave a broad range of commentary there: Canadian Real Estate Association, Terranet, National Bank, Royal LePage, Remax, B Korea. So what happened this particular month is of utmost importance to your listeners to validate what I've been saying here in the show now for a couple of years. All house price metrics, sooner or later, other than ours, sooner than later, go back to the average selling price. All the nonsense that you hear, the Terranet National Bank 11-city composite, the Canadian Real Estate Association benchmark prices, the Royal LePage median price index, the Remax brokerage price index, B Korea's benchmark price indexes. Over time, because of the methodology, these metrics all come back to the average selling price, which, as I've told you, the reason why is it's the average purchase price, not selling price. Two totally different things. This is a case in point where the last 5 years, well, say the last 4 years from the middle of 2013 through 2017, all of that period of time, the Canadian population has been misled by Canadian Real Estate Association, and they've been misled by the Terranet National Bank Index. And it came proven this month. So your listeners need to do this. They need to go to the Terranet National Bank House Price Index website, and you'll see on the home screen this month that it says the composite 11, which is their big number, the one that's appeared in the paper for years on end, is recording 217, which means it's gone up 117% since the day it was launched. Because the day it was launched, they called July 2005 100, and it's gone up to 217, the index now, meaning prices have gone up 117%. That is a period of between 149 and 150 months, depending on how they want to do their calculation. What has also gone up exactly 117%, or if it was indexed from the exact same period of time over those 150 months, is the Canadian national average selling price. It has gone up up to 217 as of November. Now, that 150-month period for the average total September of 2017, that 150-month period was from April 2005 till September 2017. The Terranets was from July 2005 to November 2017. Both 150 months, allowing for the delay. What's happened in this case is the delay that is built into the Terranet House Price Index finally caught up. And it caught up across the country to where the two indexes are identical once again, 217. The exact same thing happens with every MLS HPI that's out there. All of the nonsense that you've heard for years and years on end is coming home to roost. These people are about to be exposed because anybody with a calculator can sit down and find out what the nonsense has been. Your benchmark prices are exactly the same way. Everywhere in Canada except Vancouver. Only in Vancouver. The Real Estate Board of Greater Vancouver and B Korea have they continued to try to do everything possible to keep that benchmark out of alignment with the average selling price. So all of Alberta, all of Saskatchewan, all of Manitoba, all of Ontario, all of Quebec, all of everywhere else in Canada except British Columbia, the benchmarks all align with the average selling price. And that's how, your way, it's how messed up that it's been. But what your listeners need to understand is, the national average selling price of every single home that's been sold by the Canadian Real Estate Association for the last 12 and a half years, from St. John's, Newfoundland to Victoria, British Columbia, and everywhere in between, including the Northwest Territories and the Yukon. All of those millions and millions and millions of homes that the Canadian Real Estate Association averaged at 117% over the last 150 months. The exact same thing, supposedly, only 11 cities did. The most expensive 11 cities in the country, but only those 11 cities. It's because, folks, real estate math is unavoidable. Everything that is going to happen in a real estate market is going to happen. Don't listen to any of these forecasts. Royal LePage gets to make up theirs. They can have, because it's the median price produced by their broker owners, who are actually their franchisees, nothing more than that, they can have any stat they want at the year end. Their forecast should be the most accurate in Canada because they make up their own stats. RE/MAX, they take the stats from the real estate boards and reproduce those. The fact of the matter is, when we're talking about certain price points, especially in Vancouver, especially in British Columbia, where that's the only place where those benchmarks haven't aligned, even over the course of this year, there's a major problem. It's being debunked right now. And your listeners have been going out and buying the single largest financial asset in their life using this information.
Where are those numbers wrong, and what should they really be looking at?
Well, where are the numbers wrong? Well, you have to understand, all of these numbers are a buyer side metric. It's got nothing to do with houses. It's the houses that they're buying. This is why the people in Calgary, who, if you listen to our own old shows back around 2014 or something like that, I mentioned how the housing market in Calgary was going to correct. That exact same thing happened. And I also explained how the real estate board was going to claim the correction wasn't going on. The exact same thing that the Vancouver Real Estate Board has claimed this year. And then I explained to you how the quality changes of what you're buying. In other words, if you're qualified to buy a $500,000 house this year, you're still going to be qualified to buy a $500,000 house next year. Now, in this particular year coming up, we've got the new B20 rule, so there will be some people impacted by that rule. Very few, but there will be some people impacted by it. But throughout history, for the last 40 years, those things never change. If you could qualify to buy a $500,000 house this year, you can qualify to buy a $500,000 house next year. You're still going to spend $500,000 because the real estate agents want you to spend $500,000. The banks want you to spend $500,000. The government wants you to spend $500,000. Everybody wants you to spend $500,000 so they can all get their share of the profit. They don't want you to look at what you should be spending. We have people, Jim, who come into the program, and we do the numbers for them, and it is impossible for them to own the home that they own. They don't realize that, like, they're asking, well, why are we not getting ahead? Why do we have to keep building credit card debt? Why do we have to go in and take money of our HELOC to support our life? We've purchased this property under the exact terms the banks, the government, CMHC, the realtors, everybody has told us it was okay to buy it under. But we're spinning our wheels. We can't get ahead. Honestly, we just keep sinking deeper and deeper in debt. And that's because none of those calculations are built in your best interest. They're built in the best interest of someone else. So when you look at selling prices, because I know in the show we've had that discussion here the last couple of weeks about selling prices should be reported. And I've been on the show here explaining with the Privacy Commission and everybody else why that legal standpoint is something that I disagree with. The point of the matter is the people will still go out and spend the exact same amount of money next year. The only difference is how much home you get for that money. It is a buyer's side metric. It is not the average selling price. It is not a benchmark price. It is not the Royal LePage median price. It is not the B Korea benchmark price. It is not the REMAX price. It is the buyers what their purchase price is. How much equity do they have, and how much debt will the bank lend them? Add the two together, that's what your purchase price is. It's got nothing to do with the selling price of the home. If I go to Vancouver and I have $1 million to spend, and I look at the best thing that I can buy in Vancouver is a townhome, then I'm going to spend $1 million on a townhome. If I go to Abbotsford and there's a single detached home there for $1 million that I can buy, I'll spend my $1 million on that single detached home. Where I spend my $1 million gets recorded. And it gets recorded and misrepresented to the public as a selling price. Yes, it's true. I am purchasing a house or you can say the seller sold me their house for that amount of money. But that is an illusion. That is it's not real. Because if interest rates go up and my buying power drops, then I can only offer you, say, $950,000 for that townhouse in Vancouver. I can't offer you $1 million anymore. And you can decide whether or not you want to take it. Now, if you've lived in that house for 20 years, you may say, hey, I'll take the $950,000. I only paid $150 for the house when I bought it. And you made a windfall. This is where these metrics are going to catch up for all the real estate agents, the banks, everybody else. Because last time around when we had a major house price correction in Canada, which was the early 1990s, I mean, we had a correction with the Americans with their house price correction of 2007-8. We had a correction here in Canada. Those metrics were all new then, people. The MLS HPI was a brand new entity. It had only been out a couple years. CareNet National Bank, brand new entity. These are all brand new things. Nobody listened to Royal LePage back there, and nobody listened to REMAX back then. I mean, that was 10 years ago. Nobody listened to those people. Believe me. They were just a joke, these comments. Now everybody's believing them. This time around, all of the inflation that is built into these HPIs is going to come out. So the magnitude of the correction is going to be recorded in a totally different manner this time than it is at any time in history. We talked about this on your show over a year ago when we were talking about the perfect storm, because foreign buyers stopped buying ultra-luxury class homes in Vancouver. Their percentage of the national sales average was so extreme at that high that it was going to take a bite out of the price. Korea flipped the benchmark price because it covered up the drop, as did the Real Estate Board of Greater Vancouver, because it covered up the price drop that was already ongoing. And here we are now, 18 months later, exactly as was forecast on your show. Exactly, if I'm not mistaken, it was 18 months before this perfect storm was going to arrive. Now we've got the OSFI, and even though that rule really doesn't impact very few people, contrary to what you're going to read in every newspaper across Canada, it's the perception is all that matters. And perception is what causes a housing bubble to break. That's what the importance of all of these years of misleading the public with MLS HPI, Terranet National Bank HPI, RE/MAX, Royal LePage, BCREA, all of these people who have put all these numbers out there, it's going to come home to roost.
We'll have more with Ross Kay right after the break.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic Engineer Gold Mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE, symbol CRL, and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
Welcome back. We're speaking with Ross Kay. Ross, I've read some of those articles. They're saying because they're stiffening the mortgage rules, it will cause prices to drop 20%. Should it, and will it?
Well, the drop in price from this new rule is so misunderstood. I just shake my head. Here I am again, once again, being the contrarian. It's clearly whoever's commenting on these rules, they don't understand, A, why the OSFI brought them in, or B, how it's going to impact home buyers, because home buyers are the only thing that matters. And you know that they don't understand the consequences of this rule change because they are making generalized comments about the entire Canadian marketplace as if it is one market exactly the same. In other words, this rule change, they claim, is going to affect everybody the same. Where we, Ross Kay Realty Consultants, we know this rule change is going to affect every single community uniquely and each class of buyers uniquely. So you cannot even make a generalized comment about the impacts of this rule change. The impact, the truth of the matter, this is what the truth is, Jim. Whatever's going to happen in Vancouver this year, which I'm not saying here in the show what's going to happen, but I can tell you that the rule change will not be a consequence of the change that takes place in Vancouver next year. When we move across the country to Abbotsford, oh yeah, even Abbotsford will be more impacted by this rule change than the city of Vancouver itself will be. Calgary, yes, more impacted. Then we move into other cities like the City of Toronto. City of Toronto, the actual City of Toronto itself, old City of Toronto, will barely be impacted by this rule change. Yet I can move across the street into the city of Markham, Scarborough, Mississauga. It will be devastating for some of those markets because that's how this rule change works. This rule change, what it effectively does is we already have what my firm calls a graduated gross debt service ratio across the nation. A lot of your house price growth in Vancouver has been caused by low property taxes. Low property taxes allow you to carry more mortgage debt being approved by CMHC and the banks. This more mortgage debt naturally gets passed on to the amount of money that you spend purchasing your home, purchase price. The same thing happens out here in Ontario in the old City of Toronto. Old City of Toronto property taxes are so low, you can spend about $120,000 more for a home in the City of Toronto versus moving across the street, literally across the street to Scarborough or Vaughan, where the bank wouldn't lend you that extra $130,000 house, even though the house appraises for the exact same amount of money. Property taxes have that amount of effect. Then you also have to consider income taxes, because each of our provinces charges different income tax. Then you have to consider municipal land transfer tax or provincial land transfer tax, because that changes across Canada and even within a province. All of those factors are impacted by the new B20 rules. I challenge all of the listeners today to go out there and find me one article where what I've just told you is revealed. They don't exist. They're not out there. You have mortgage brokers all over the country today appearing, telling you what the impact of these rule changes are, and they don't mention one of the things I just told you. It's because they don't know how to measure what homeowners or home buyers are able to buy. Thus they don't know how it's going to impact the market. They don't know. This is the same way that people go out and buy too much house because they listen to all these people and they don't realize that the house is actually going to cost them another $8,000 a year just to keep maintenance and improvements on the property. All of these things are hidden. So when we're talking about B20, it's a very complicated question. It's going to hit each market differently. And for the wealthy homeowner, each member has their own forecast in their dashboard. They're updated monthly. Those forecasts are all different for each city that the people own the houses in. And that's why you can move across the street, and just by moving across the street, you could save $100,000 on your home's value next year. That's what those rule changes are going to do, Jim.
We'll have more with Ross Kay right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're speaking with Ross Kay. Ross, can you comment specifically on West Vancouver and the detached market across Vancouver?
The Vancouver con job. The con job of the Real Estate Board of Greater Vancouver. So let me explain something to your listeners. Jim, if you had $100,000 and it went up $10,000, how much of an increase would that be?
10%.
If you had $200,000 and it went up $10,000. How much of an increase would that be?
Don't make me do math.
That would be 5%.
Yes.
If you had $1 million and it went up $10,000, that would be what, 1%?
Yeah.
That's why real estate boards, people, listeners, that's why real estate boards talk in percentages. Because it fools you. Of course, condominium apartments in Vancouver increased more this year when we're talking percentages. Because a condominium is basically what? A quarter of the price of some of the houses that are in Vancouver West? So obviously, when a housing market goes up and down, market-wise, on the average selling price, by a certain dollar volume, the more expensive homes, as a percentage-wise, don't go up as much, and the cheaper homes go up more. That changes over a trading cycle, which we've tried to explain in this show before. The category of home that you're looking at buying should only be purchased at a certain period in the trading cycle. And if you don't purchase it at that time, you should wait till the next trading cycle rolls around. That was even the case with this historic trading cycle that we've just recently concluded. If you purchased your home at the worst time, it's financial devastation. Now, let's look at Vancouver West as an example. When you're looking at house prices with the Real Estate Board of Greater Vancouver, so when people are who don't want to subscribe to us, who don't want a dashboard, who don't want to know what's going on with the most expensive asset of their life, you know, the people who don't want to believe me or they don't want to do that. Each real estate board generally provides a metric that we can cite where you can get some understanding what's going on. In Vancouver, it's what they publish as the median selling price. Why the median selling price matters is it tells you what the middle buyer is spending for a home in that neighborhood that they're citing. It's got nothing to do with house prices, remember. It's got what that median buyer is spending, what he's willing to purchase a property for. Of course, the real estate boards call this their median selling price in Vancouver. And this is where the Real Estate Board of Greater Vancouver has been caught. They're caught all the time, but this is really a case in point where people can understand. In November alone, single detached homes in Vancouver West were selling for $500,000.
Ross, right now we have to make sure people know West Vancouver is its own municipality. The west side of Vancouver is a certain area, and the West End is a different place. When I first moved here, I found it very confusing. I didn't know North Vancouver was a different city, and then there's the district of North Vancouver, which is a different city. So you have to be very careful where you put your north and your wests.
Exactly.
Because then you're talking about a different place.
Correct. So this is why I'm citing right now Vancouver West, which is the municipal district used by the Real Estate Board of Greater Vancouver called Vancouver West. There's West Vancouver Howe Sound, okay?
Yes.
But we're talking about Vancouver West.
Okay.
Now we're going to talk.
So that's the nice Tony district that's near UBC.
Yes. And we're going to talk about that because this is really one of the most volatile housing markets in Canada, where home buyers come in at different moments in time, and you get these false house price metrics reported to the public. Okay? So in Vancouver West, so the MLS district by the Real Estate Board of Greater Vancouver called Vancouver West. You can go to their website and see it, okay? It's just what Jim just described. There has been a $500,000 drop in the purchase price paid, called median selling price, in the last 30 days. $500,000. So in October, people were spending $3.8 million in Vancouver West, and the median buyer was spending $3.2 million in Vancouver West in November, 1 month apart. Now everybody says, or the real estate board will say, oh, but Ross, you're talking about a little tiny group of houses, and you're skewing the viewpoint of it. Well, I'm going to say to everybody, they use the exact same numbers, and they skew it into their benchmark prices. But this isn't a little tiny number, folks. There were 83. We're not talking 5. We're not talking 20. We're not talking 30. We're not talking 50. We're talking 83 single detached homes reported sold by the Real Estate Board of Greater Vancouver in November in Vancouver West. Now, I said it that way because I understand what every little breakdown I just gave you in that definition means. Your listeners are not, and to be quite honest with you, you're the economist at the Real Estate Board of Greater Vancouver doesn't understand why each of those little differences applies to. That being said, we're talking about a $500,000, $500,000 drop in the 1 month. Now, is that true, Ross? Did that really happen, Ross? Yes, it's true. The middle buyer, so half of the houses that sold in October in Vancouver West were sold for below $3.78 million. There was 108 of them sold, which means 54 sold for under $3.8 million. In November, 41 of them sold for under $3.2 million. That is a massive shift in a single month, and it's why house price metrics year over year should never, ever be reported to the public. They are falsehoods. They are misleading. They are misrepresentative. Not only are we not talking about selling prices of houses because it's a purchase price, also we're using this faulty year-over-year comparison, which continues to fool everyone. If I go back to April of 2016, everybody's going to remember that single detached homes in Greater Vancouver had increased 30% in 1 year. The Real Estate Board of Greater Vancouver went around making headlines across North America. West Vancouver had gone up 31.6% as of the year over year, as of April of 2016. We're talking national news around the world, in every country that listened to about the Canadian housing bubble. But when we come around to this year, we're not hearing those stories anymore. We're hearing about how prices are still going up. We're hearing about how single detached homes are still going up, and they're going up in Greater Vancouver supposedly by 6%. Overall housing is up 14%. The Real Estate Board of Greater Vancouver has the audacity to tell Vancouver homeowners prices across all categories of homes are up 14%. How is that possible when the average selling price has not even increased 1%? How is that possible? The only place in all of Canada where the average price has gone up 1%, supposedly housing prices have gone up 14%. That doesn't happen anywhere else. There is basically a 1 or 2% difference between the benchmark prices everywhere else in Canada and the average selling price. Only in Greater Vancouver does this wild variance happen. It's happened to you folks because they instituted the first instance where MLS HPI was used. The methodology is so flawed that in Vancouver, nobody realizes what's going on. They're telling you right now, year over year, from November of 2016 till November of 2017, the entire Greater Vancouver benchmark price residential composite aggregate is up 14%. Yet, the average selling price when the year ends will be up 1%, not even 1%. How is that possible? It's not. This is why the Vancouver West area is so important for everybody to understand. Don't believe anything a real estate agent of any sort who claims to be trying to do anything for the greater good tells you, because they don't know what they're talking about. When there are a few properties for sale, there is a sucker born every minute, and the real estate agents are looking for suckers. They're looking for the people who will believe what they're saying and will buy that house. When your inventories are as low as they are, most people should not even be putting their house in the market for sale, because if their house happens to sell, they're forced to go buy another house. They're not going to rent. They're homeowners. Many of these people would feel embarrassed to rent. I've owned a house for 20 years, Ross. What do you mean I should go rent a house? Well, you've just sold your property, and the way that the cycle's rolling out, you really shouldn't be buying for another year and a half. If you buy today, you have to understand there's nothing for sale. Since there's nothing for sale, you're going to have to buy something you really don't want to buy. You're going to buy a lower quality home than you really have to. If you waited another 6 months, another 12 months, another year and a half, depending on where we are in the cycle and what category of home you're buying, you may get a house that is 20 or 30% higher in quality once those properties get listed for sale. And since all of these things are cyclical, they have been for the last, I know for 40 years, so I'm assuming for 60, they have always followed this pattern. And it's a pattern not that it just happens, it's just a pattern of how the process has to be accomplished. In other words, you're not going to list your own home for sale until you know you can buy another house. Unless a real estate agent convinces you to list it for sale and then tells you not to worry about it, we'll find you a house when it's sold. Worst advice you can ever be given. You need to know what category of home you're in right now, and that will dictate what part of the year that house should be sold in. You also need to know what category of home you're going to be acquiring, and because that is going to move. Now, you can alternate your closing dates. In other words, if I have a Category 2 home that's ideally I sell it in March, but I'm going to be purchasing a Category 4 home, which ideally I should be purchasing in August, I can get a longer closing period on my property in March that allows me an ample time to purchase my property where the ideal time is August to buy it. Real estate agents will never tell you that because they want their commission as quickly as possible. So we go back to the 90-day closing date. Oh, let's sell your house, give me 90 days, and I can find you another house. Don't worry about it. Well, of course you can. You're going to have to buy. You're going to have to compromise. You're going to have to make a choice that costs you tens or hundreds of thousands of dollars because you no longer have a place to live. That's the reality of Vancouver West. When people are purchasing a home at the wrong month, October, for Vancouver West, instead of a better month, November, Vancouver West, it is a $500,000 difference.
No one is told about the seasonality of home buying.
No, seasonality in itself is a myth. It's why I've said in the show over and over again, the real estate board, CMHC, the banks, they all release these seasonally adjusted numbers.
Oh, so what you're saying is there's more of a cycle, but it doesn't depend on the season.
Right. So Exactly right. So the cycle doesn't run in a calendar year. So certain categories of homes, depending on where you're located in Canada and depending on how your housing market is functioning at any given moment in time, or when the trading cycle rolls over, each category of home will have an ideal buying time, and they'll also have an ideal selling time. We have people who right now are in the selling program, Jim, who we're telling in Toronto not to sell their property. We're telling them, they're calling us, they've hired us for their program, and when they started maybe a month, 2 months ago, so I'm thinking of a particular case in point here as I'm talking to you now, and all anxious about wanting to sell their home. They want to use the program because the program saves them tens of thousands of dollars. And then they find out they shouldn't even be listing their property right now. So they already know these Rule B20s coming in. But for the category of home that they own, and with the listing inventory that's out there now, and how the housing buyers move through the market, they shouldn't even be listing their home till next spring. And they have zero risk. In the last couple of months, their category of home has actually gone up in price. And it will so even in spite of this rule change, because there won't be enough listing inventory come to market for that specific category of home in the spring to offset the rule change. So what it means is that there'll be enough buyers able to spend what that category of home is worth next spring, regardless of what the rule change is. Now, there are other people who are on the buyer side who are also delaying their purchases. So how can we tell people who want, say for the sake of the argument, who want to sell their properties in Toronto right now, that they should delay it, and they want to buy a property in Toronto, and we tell them that they should delay it? The reason is they are own or buying different categories of homes. And the cycle, how the cycle works, as long as you know how the cycle works, that's when you enter and exit the market. If you can do it with a long enough period of time, saying you're selling an existing house and buying another, if you can do it with a long enough closing date, sometimes it works out. Other times, you may have to move into a short-term rental to make it work out. Now, if 50, 100, 200, 500,000 doesn't make that amount of money to you, like if your convenience, not moving to a short-term rental for a couple months makes a difference, then our program's not for you. If you want that extra $50, $100, $500,000, then our program is for you. But when these people talk about seasonality in a housing market, as if snow is going to stop a home buyer from buying a house, they're nuts. We just had the registrar for the province of Ontario do an article last Saturday in the Toronto Star, where he said that the question that came to him, should we sell our house in December, January, with the Christmas and the New Year's season upon us? And his advice was this: call up a real estate agent, and if the real estate agent tells you to sell, call up 3 real estate agents. And if those 3 real estate agents all give you the advice to sell, go ahead and list with one of them and sell. The stupidest advice I ever hear. And I heard it for 30 years. Never, ever sell your house. Of the 5 categories of homes, of the 8 categories of homes in Ontario, there is only one category of home that you should even consider listing in the 8-week period pre and post Christmas, New Year's. There is only one category. The other 7 categories of homes you should never list. Maybe the conditions are okay for one category of home. But the provincial regulator says, call up your real estate agent. Well, what the real estate agents all say is, oh, yeah, it's a great time, because they want to get your listing signed. They don't care about you. They don't care about what's in your best interest, because they can't afford to. They can't trust that they will give you the advice, no, you shouldn't list this house till March, because that leaves them exposed December, January, February, and March, and another real estate agent comes along and convinces them to list, and then they make nothing. The result is an industry who tells everybody now is the best time to sell. Now is the best time to buy. It's always the best time to sell. It's always the best time to buy. There's always buyers out there. There's always houses out there for sale, which is an outright lie. Yeah, there's junk out there. Yeah, there's buyers who won't pay. If your listeners do this, if you Google what's the best time of the year to buy a house, you're going to find an answer, and they're going to tell you it's Christmas. Because all of these secret insider reports that everybody has, that everybody wants access to, they say one of the techniques is buy your house at Christmas. And actually, some of them even say put the offer in Christmas Eve, or put the offer in New Year's Eve. They'll actually say that, and they'll give you all this long bunch of reasons why. It's never been true. If it was true, I would have had hundreds of clients purchase houses on those days. It's not true. What is true is you've got a real estate agent who's hungry for commission. You get them out the night of Christmas Eve, New Year's Eve. They want to get home really quick, and they'll compromise their clients on the buyer side or the seller side. And there's always a few suckers out there who listen to them. I don't mean to be that disrespectful when I use the word sucker, but enough is enough. We have put up with this now for an extremely long period of time, since May of 2013 forward. We have allowed it to go on. This nonsense must end. This is the largest asset class in Canada. Last week, StatsCan came out with the net wealth of Canadians. That net wealth is dominated by home ownership wealth. It must stop. We have today, Jim, did you hear the news that Warren Buffett's Berkshire Hathaway Class A stock crossed the $300,000 barrier today? I don't know if it fell back at the end of the day or not, but that was breaking news across the country. Berkshire Hathaway, one share of Berkshire Hathaway crossed $300,000. And then people ask me, Ross, is a house a good investment? A house is only a good investment if you own it in the right way. What I mean by that is this. In 1990, before the last housing correction happened, if you had purchased as much Berkshire Hathaway stock as you had spent on a house, right now you would be 10 times richer. As of today, the exact same amount of housing money spent on a house that was spent on Berkshire Hathaway stock, today the house would have gone from about $143,000 up to $509,000. Berkshire Hathaway stock, you would have spent $143,000, and now you would be worth $5 million. Yes, I believe in home ownership. Yes, I believe it should be done the right way. The right way would have been done back in 1990, team up with Berkshire Hathaway. Problem is, you're never going to get that advice from a bank or real estate agent. You're never going to get it from a financial advisor, because the financial advisor is going to tell you should rent. The real estate agent is going to tell you to buy and encumber yourself with as much debt as possible. You need an unbiased viewpoint. The difference is $500,000 or $5 million. That was recorded today. $500,000 or $5 million. Take your pick.
Ross, thank you so much for chatting with us.
Thanks a lot, Jim.
My guest has been home ownership consultant Ross Kay from thewealthyhomeowner.ca. You're listening to HoweStreet.com radio. Our popular YouTube channel is Talk Digital Network. Find us on Twitter @HoweStreet. Questions for the show can be sent to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.